What's up, people? Today is Monday, October 16th, and it's currently 5:36 p.m. So I wasn't able to do the weekly recap for last week on time, but this is the weekly recap for Monday, October 9th through Friday, October 13th. Now, looking at this spreadsheet, so this was this week right here. So Monday, October 9th, we didn't have any trades, any official trades, let me put it that way. Any official trades. Tuesday, no official trades. Wednesday, no official trades. Thursday, we had an official trade on the live session, which I'll go over now, and ended up as a loss of just minus 0.75%. And as we'll see again, we just got faked out and the trade came back up, but anyway, still a loss. On Friday, we had two trades and I'll go over them. And one of them was minus 0.375. 0.375, I think. Yes, 0.375% loss. And the second one was also 0.375% loss, for also a total of minus 0.75 for Friday. So unfortunately, we've had a little bit of a losing streak, but so down for the month of October so far, minus 2.25%. And yes, so today too, but anyway, this will be for this week. So today, no official trades as well, even though I did send a trade idea today that went straight into profit, but we'll talk about that a little later. So for now, let's go over the trade for Thursday. So Thursday, so again, I'm replaying the chart in order to show you the price movement. So on Thursday, we had a double sell SAR somewhere around here. Again, I'm doing this after the fact, but if you go on the Discord, this was the trade setup here. We had a double SAR somewhere around this zone. So here, when we mark this up, and again, of course, we can't see those ones because they were from a little bit far back, and it's already past the 500 candle limit TradingView allows. So this one, go ahead and mark this up, and mark this up as a test and rejection. So that was a test and rejection for a buy. Daily bias on gold was still bullish. So if we go here on the daily bias, by this time, the bullish bias on gold started on Thursday, because that's when there was that closure above this bullish SAR. So this was on Thursday around, right when price was still around 1874 area. Now here, and you can see that's the same place price was. So here, this was a double SAR zone. So since the zone was below us, we wanted what price gave us here was a test and rejection entry. So the first candle was the test candle, came and tested that double SAR zone, and this is the rejection candle, which also closed above. So that qualified as a test and rejection entry. Also, this happened during the live session. So at this point, I told folks I was buying gold with a 30 pips stop loss, 60 pips TP. So I entered on the next candle, because this to me was one of the nice setups, because the entry point was right next to the SARs, which is what you want to have. So at this point, so price started off in profit, you can see, right? So here the goal is for my trades is to set a 1:1 when you've already achieved set break even when you've already achieved a 1:1 risk to reward. So here you can see we almost had that 1:1 risk to reward, which would have allowed us to set break even. So for me, it's always either stop loss, TP, or break even. No in between. You just got to trust your setups. If the trade is valid, you just go ahead and take it, and whatever happens. But yeah, that was it right there. Let me see this, just make sure I'm putting it there. So you can see we came so close to the trade being like 30 pips in profit, at which point we would have set break even. But at this point, we had the reversal to the downside. Now let's look at this reversal. So at this point, right, trade did not give us a 1:1. So we still, personally, I still held on to the trade. There were people who took profit, and also this would have turned from a possible to a test and rejection because it validated as it. And then here you see gold kept dropping. And then at this point, I got stopped out, or anybody else who was holding the trade got stopped out as well. And if we keep seeing what happened here, right, price dipped down, and later on in the day we had price recovering to the upside. But anyway, at this point we had already been stopped out of the trade. But this is when then on Friday gold retraced up so heavily and went, you know, in Friday, that's when gold broke even the 1900 zone. So you'll see here, right, gold kept spiking and spiking, but you can see this, right, we just got manipulated a little bit of, you know. So for this trade, even looking back, there's really not much we could have done to avoid this. We just got caught in a stop hunt. But to me, this was a good trade. How I define a good trade is when your entry is next to, and I always insist this during the live session, so when I'm educating, when your entry is next to the SARs, that is the best setup right there, so that you don't have to go to other time frames to seek another entry. Like when your entry is right next to those SARs, whether it's a break and continuation, whether it's a test and rejection, that is what you want. So for me, with this trade, do I feel bad? No, it's just one of those instances where we just got caught in a stop hunt and we moved on to the next trade. So that was the loss we took on Thursday. So I'll exit this chart replay mode, and you can see where gold is at right now, right? Look at that. Look at that pump. So anyway, on to the next one. So for Friday, this loss we took on Friday, that was US30. So again, I've replayed the chart. So you can see here the current candle is Friday, October 13th. So this is a 15-minute candle. I believe it was a 15-minute entry. So here we have a double SAR, and this SAR is still there. So we can see this live. So here, what entry was forming here? Since price, the level at some point was below the price, so this would be a break and continuation entry. So here you come here and you mark up your entry. So you mark that up, come in here. So this is a break and continuation for a buy. So at this point, it was still a possible break and continuation. And then when the next candle closed, and we'll see that for it to be break and continuation, this candle also had to close above. So remember, my entries are always 2 candles. So here went from being a possible to a break and continuation. Now I saw this trade, and I marked it up. It was during the live session again, and I marked this trade up. 50 pips stop loss, 100 pips TP. Now, for this trade, I had mentioned, and the reason I say to use a 0.375 as opposed to like the normal 0.75 per trade that I take is looking at this price or structure right here. This was during New York Open, so you can see how far price had pushed. And again, also, it's on a Friday. So a red flag here to me was the overextension of price. So price had shot up pretty heavily. And even here for the people who trade ICT concepts or smart money concepts, you can see there is some fair value gap here, right? Between, in between this big candle. But given my overall bias on US30, and also given where the entry had validated, remember the key thing is to make sure your entry is next to your SAR. So right, for this entry, it allowed us to have an entry next to the SARs. But also looking at the red flag there, I just said instead of taking a 0.75% risk, you go ahead and do 0.375. So we hopped onto this trade with 0.375. Unfortunately, the trade melted to the downside. Again, I know there was a red flag there. So compared to the previous trade I just went over for gold, for this one, if I ask myself, is there anything we could have done better? So this one, and I even went ahead and journaled this one. So if we get a similar trade like this going forward, and you have overextension, so overextension at this point to me is a red flag. So if I ever get any other setup that's similar to this, I won't take the trade, because again, it's all about learning. You learn from what has happened and then you just decide. But I've also seen instances where such a setup would have gone straight to TP. So I guess going forward, it's just weighing those two options. That I know from experience, there's trades like this that have gone to full TP despite price being overextended. And then there's other trades like this, for example, like this one that happened, that price went straight to stop loss. But thinking back, I think this one, it ended up the way it ended up, not really because of the overextension, but because of the day of the week. So this day was Friday. So Friday, you normally have low liquidity in the market. You normally have some irregular price movements, because you have to consider Friday, like for example here, it was during New York Open, so you have to keep in mind that's the end of the trading week. There's not going to be like that evening Asian session, because this is the last trading session of the week. So London is closed, Asia is also closed for trading, so New York is the only one that's open. So I want to say I've seen the trades that I've seen that are similar to this that go into TP or take profit are during normal trading days or regular trading days, like Tuesday or Monday, Wednesday, Thursday. So Friday, you definitely have some irregular price movements. But anyway, so that was the first one, 0.375. Now for this trade, when you took that loss, so normally some of the things that I do, if price is overextended, sometimes what I do, I will go on a lower time frame. So in here, after we got stopped out of this one, another thing you see here is that as much as this trade was based off of this double SAR here, we also had another double SAR, which is right here, this small one right here. So another thing so there was that entry, and then guess what? There was also a break and continuation of this double SAR right here, because this break and continuation, so this huge candle and the next one actually gave us two break and continuation setups, because it broke and continued this double SAR zone and it broke and continued this double SAR zone. So at this point, if forgetting this top SAR, so at this point, if you're looking to trade this double SAR zone, and the key thing is to make sure your stop loss is below the SARs you're trading. So if I was trading this bottom zone and not this top zone up here, I wouldn't have entered on impulse. I wouldn't have entered up there. I would have waited for price to retrace to this double SAR zone. So we had gotten stopped out on that one trade, and then I saw that there was also another break and continuation, and it was validating here. Now, what you'd normally expect if your trade has validated and price is retracing, or you're waiting for price to retrace back down to your SAR level, you then go down to the 1 minute time frame. So at this point, I said I was going down to the 1 minute time frame. So here, when you go down to the 1 minute time frame, because I don't extend my SARs on the 1 minute time frame. So here, when you go down to the 1 minute time frame, what you're looking for price to retrace to the zone, to those SAR zones that you're trading, and then you wait for an entry on a live SAR. So in this instance, right, if you're looking for a break and continuation, so here we would want to wait for a break and continuation on the 1 minute time frame. So that was the second trade that we took. So here we keep playing the candles. We want to see a live SAR, and then we want to see a break and continuation. So let's see. So there's the live SAR. So that's the break candle, that's the continuation candle. So again, here I said I was buying US 30, 50 pips stop loss, 100 pips TP with 0.375% risk. So again, trade started off in drawdown, and then came back up, so it was in and out of profit, and at this point liquidity had started dying out, but we got some nice push up. So even for this trade, keep in mind, for me, when you achieve a 1:1 risk to reward, you said break even. So even for us for this trade, we were waiting. If US30 got to this point, we would have set break even, but you can see what happened, right? Price was just coming back down and eventually came back down and took us out at stop loss. So again, for this trade and the one on Thursday, right, we just missed that 1:1 risk to reward just by a few pips. And I think later on in the day, but right, this is also the importance of putting a stop loss, because you can see at some point US30 kept melting to the downside, but I think later on in the day we had some spike up for US30. So let's see, do this, delete this real quick. I think later on in the afternoon, or did this happen Sunday? This was still Friday. Yeah, that's still Friday. So I want to see, if I'm not wrong, US30 spiked up later. Because even now US30 is all the way up. No, I don't want to do the real time. Let me do this. Oh, yeah, there's that spike I'm looking for. Let me 10x this. Consolidation. Yeah, it didn't. I think maybe it spiked up this morning, like Saturday, Monday. Yeah, but later on in the day, yeah, price just died off. But eventually, this was market open yesterday. But if we go and see where US30 is right now, we will see it's compared to where we were trying to enter. Right, look at our entry. So our entry was there, came, and then eventually it came and spiked all the way up. But no, that's just the market. You get both the good and the bad. But anyway, so for the Friday trade, or for the Friday trades, of course, there's those few things that we learned and those we can apply going forward. So it's all about learning. But right now you can see how US30 spiked all the way up. Today I caught a nice buy on US30. I just sent it in the trade ideas. It wasn't an official trade, but you guys see here, if I go in the trade ideas, there was a nice US30 buy that I'd sent. Again, this is not going to count as an official trade, because an official trade I normally send out with the entry parameters, but you can still use my trade ideas and decide whether you're going to take the trade or not, because I know there are people who took the trade here. But you can see for me, I took that trade. It's a trade I took today. So this is the importance, right? Just learn the concepts so that you don't have to rely on me when you're trading, because you can be with me on the live session, and unfortunately it can be some of those days that we've seen in the past 2 weeks or 3 weeks where we've just had some losses or break evens. But so long as, like here, since for me I risk 0.75% per trade, if I lose like this is a 200k account, so I lose like 1500, but if I win 3 grand. So for me to how do I put it? So I would have to lose 2 consecutive trades in a row to lose just the profit I made from this one trade. So this is the importance of just having a good risk to reward strategy, having a good money management strategy. If you're done for the day, if you've taken X amount of losses, you're done for the day, and then you come back the next day. And so long as you have good entry concepts, you have a good model, you have a good risk to reward ratio, you should be good to go. But anyway, we'll see what we get during this week. Week has started off well, and I'll catch you guys in the next video. All right, guys, peace.